Good morning, everyone. How are you all doing? I'm sure by now you would have had a good insight as to how the income tax law operates, right? And I'm sure by now you all would have developed a very good understanding of the approach towards this subject of income tax law. Today, we'll try to develop this approach further and we'll move on to a very, very important and crucial part of this income tax law, which is this present head of income, which is PGBP. So let me take you through the detailings, the intricacies of this head. And yes, I'm sure by the end of this, you all will be thorough with the computation of the business head. So once again, welcome to all of y'all. And yes, very good morning, Sridhar. Good morning, Anchal, Vishakha, Vijwal, Akash Mandal. Good morning, everyone. Now, this particular head of income is actually otherwise very easy. If let us say I do not, if it is not very correct to use the word easy, at least I'll say it is very convenient and it is very practical and interesting topic, right? But when I'm saying this, maybe y'all are having some other views about this topic. So before I start my deliberation, I want inputs from y'all. Let us make our session a bit more cross interactional rather than only me talking and you only listening. Let us make it more value adding. And this will happen once you start involving with the subject, with the topic. So let me know, what have you heard about this topic before we start today? So definitely once you're in this field of chartered accountancy, you would be meeting your seniors, your other friends who are studying along with you. And definitely when you exchange your concepts, your understandings, your confusions, definitely something would have come out about this topic. Many times this topic of business head income is in short referred as PGBP. Why it is referred to as PGBP? Because the law calls it profits and gains from business or profession. So students have made it short PGBP. Now, tell me, what are your initial views, initial inputs about this topic? Chalo, tell me, what have you all heard about this topic? Yes, students, what have you heard about the topic of PGBP income? That is income arising from business and profession. Chalo, give me your inputs so that I can then keep that in mind and accordingly I'll proceed. Yes, students, waiting for your inputs. So I've got one input which says it is interesting and practical. I've got another input which says it has lot of adjustments, so it is tough. Then again, I've got input which says, sir, as we did salary, it was for employees, PGBP, it is for owners doing business. Yes, you're right. Perfect. Then Lakshmi says, charging tax on income that arise out of business and profession. Okay. Sridhar says the tax is levied on income of business profession. Fine. Okay. What else are your inputs on this topic? One, what you know about this topic or you have heard about this topic. Two, what are your concerns or as a student, see, whenever we start a topic, you have some prima facie preconceived view about the topic? I want to know that. Okay, Anil, fine. Okay, Dhanlakshmi says difficult topic. Okay. Yes, others. Whatever you have heard of or whatever a preconceived understanding you have of this topic. Anshul, that is what you are talking about business. Here I'm not right now talking about any concepts in the topic. I want to know what have you heard about this topic from the income tax law? Okay, Aditya says it depends on business persons. Mohit says it is very important head for practical life. Okay. Vishakha says income arise from doing business or profession. Okay. ठीक है. See, again you are telling me about the topic as to what it covers. My first question now I'll say is first tell me about your concerns about this topic. What have you heard from your seniors, from your other friends who may be studying along with you about this topic? Okay, Kambira says deductions are little difficult. Dhanalakshmi says topic is huge. Okay, lengthy. Okay, Vishakha says yes. What else, students? Okay, perfect. Good. Now see, whenever you talk to a senior, they will say कि income from house property is good. Why? Because it is a small topic. But then it will say in some cases it is confusing. For income from salary, they say it is easy to understand, but it is very lengthy. Hence, it is slightly difficult to remember list of three, list of four, how to calculate salary in different cases, and then some perquisite valuation. But still, students are happy with salary, though it is very vast. Why? Because the calculations are very easy, or I'll say it is copybook. Copybook means once you remember the provisions, it is just simply replicating it without much application of mind. But the moment you come to the topic of PGBP, or you come to the next topic, which is capital gains, for these two topics, generally I've heard that initially students says no, 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 it is very difficult. Some says I've left it as an option, I'll see at the end. Some says it is difficult to remember, right? Now let me tell you, whenever you are studying any subject, no subject you will find as completely interesting. And now again, interestingly, what I have found as the meaning of interesting by the students is students call those topics as interesting which they find easy to solve, easy to remember. And the moment the topic is slightly tricky or the questions are tricky, the student suddenly starts saying, no, 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 the topic is difficult or it is not interesting. Correct. Now, I'll tell you one thing. When you talk about these two chapters, this head, that is business head, and the next head, that is the capital income head, both these topics are the most lengthiest chapters in the income tax. The chapters with maximum sections, maximum provisions. But having said this, I'll tell you, or I will assure you that if you follow the mechanism, if you follow the systematic approach which we are going to discuss. And if you slightly just take one extra effort of revising everything daily, that is from today, you have to study this topic daily by simply revising the topic. Then I assure you, I guarantee you that you will not find this topic difficult at all. Rather, this will become one of your biggest strength topics in your exams and in your actual professional life. Now, what is important about this topic? Importance of this topic is when you talk about your professional life, that is when you are working as a chartered accountant, you are having your office, you are having multiple clients. In that case, when the clients come to you for their business, sorry, or I'll say for their income tax computation, in that particular case, it will happen that out of 100 clients, 75 plus clients will be one who are coming to you for this particular head computation. That is the beauty, that is the importance of this topic. So, 75% or more of your clients who are coming to you will be coming to you for the computation of their business incomes. And that is why both at inter and at finals level, you will find this topic having the significant part in your examination paper. Okay. There are some one-off odd papers where institute purposefully do not follow the same past trends of papers and slightly change the trend. In that case, this topic may not have much weightage, but still there will be no paper where this topic can be ignored completely. In fact, when you come to finals level, you will find that many sums, even though they may be dealing with some specific entities like companies, like trust, like foreign entities, still their computation, since again they will be majorly coming to you for consultation on this business income only. That is why in the paper, even though the entities would be different at final level, you'll have computation of different entities questions. But again, those questions would be based out of this chapter. That is the relevance of this chapter in your exams. Now, since it is relevant in your exams, and since it is the most crucial topic as a practicing chartered accountant, hence it becomes important for us to master this particular chapter. It becomes important for us to ensure that we are thorough with this chapter. And I assure you, when you follow a systematic approach, which is required for a particular topic, and secondly, as I said, just one discipline, that is keep revising the provisions daily. Once you do this, you will be through with a particular chapter, a topic, through in the sense, I will say you will be master of that topic. So with this assurance, let me start with this particular topic as a part of your curriculum. So now the heading given to this topic is profits and gains of business and profession. We call it as PGBP in short. Why? Because the full form is profits and gains from business and profession. Now, before I take you through my notes, which I'll be sharing with you for your reference, but it won't be shared immediately. Why? Because the moment I share it, since they are concise, you will only limit yourself to the concise notes, which I do not want to. Now, let us first study this topic practically before we go to the topic from the books. So practically what I want to tell you is, so let us start with very important part, that is why you are studying this particular subject, because at the end you should be able to do computation of income of every assessee And obviously, on the basis of this income which you have computed, it also will lead to computation of tax. Now, when we talk about computation of income, the law has divided your incomes into five sources or five heads. Now, what are these five sources or five heads? Means from what all sources or how you can earn the income. So, as per the law, income can be earned one from job, which they call as salary income, then from rentals, which they call as house property income, then by doing business, which they call as PGBP income, then if you have sold any asset which leads to capital profits, they call it as capital gains. And then comes the residuary head. What all incomes are not covered in the above four heads, they will be covered in the head other sources. So first understand this, that you are having these five heads, you are having these five sources of incomes as per the law. Now, definitely, all your incomes will be fitting in one of these sources. There is no doubt about it. What is important is when we are dealing with practical sums, what type of sums you get for each head is important. Now, we have already done these two heads. For these two heads, the sums are given very specific. What do I mean by very specific? So you have solved salary head and the question given was containing only exclusively salary details. It starts like this, that Mr. Ashok is an employee of XL Limited. Maybe the post is given this Mr. Ashok is a finance director, and they start giving you all the details of salary. So Mr. Ashok is drawing following emoluments. So basic and then dearness allowance and then HRA and then motor car perquisite and maybe gratuity if it is a retirement sum and so on. Similarly, when you are solving house property, the question was very specific that Miss Anila is having three properties. One is in Mumbai, one is in Dehradun, and one is in Kochi. And then they start giving you details that this property gives so much of rent, this property has a loan and this type of loan and interest, this property has these expenses and all the other details. When you come to PGBP, I'm talking about exams. The first important and interesting point about PGBP chapter is the question which comes for PGBP is also your comprehensive computation question. What do I mean by comprehensive? So in the exam, the compulsory question which you get, which includes firstly one MCQ, which is also based out on the entire syllabus, and also a comprehensive sum, which means a sum which requires computation not of one specific head, but of total income. It may also have adjustments for deductions under Chapter 6A. It will also have requirement of computing tax liability. So a sum which covers majority part of your syllabus is what I call as comprehensive sum. In other words, the sum is nothing but replica of how a client will come to you, and the client may be having multiple sources of income. Now for this sum, you have to first understand the approach. So generally these sums at inter level would be given as a trading P&L account, because we are talking about business head. So the question will start with that you are Mr. X, you are running a business, and following is the trading P&L account of your business for the year financial year 25-26. Now, when I say P&L, trading P&L, so what will be there in your trading P&L? So trading P&L will be covering, just remember one thing, I will be making a common trading P&L, not separately how like we prepare first GP NP. Many times the question is not like that. It is a running account which covers details of both trading and P&L. So you will be having your sales if you are into trading or manufacturing business, or if you are into some service sector, you will be having revenues like gross receipts. For example, if a CA or a doctor's sum is given. Then, so gross receipts may be from fees and etc. Again, if you are a trading or a manufacturing concern, closing stock may be given, and then they will say interest on debentures. They will say dividend on shares and so on. Just like how you have your accounting again. And besides this, you will have additional information, same like, so it is nothing but like your accounting questions. Now, students, what you have to first understand is the approach. As I said, these sums on other heads like salary, like house property, like capital gain will be very specific. Specific means only related to that topic. But PGBP sums is generally part of the comprehensive sum where you are not only asked to compute PGBP income, rather you will be asked to compute total income. So in short, in this format, you will be required to complete the entire working up to tax liability. Now, when you are given such type of a comprehensive sum, in such sums, you are having details of salary also, HP also, business also, maybe capital. If not, then other sources, then various deductions under Chapter 6A, etc. Now, your approach B to compute the business head. This is the first most important point. Once you crack this today, once you understand how to approach the question, your 40% problem from this chapter is over. Because many times students basically have two major uh, problems with this chapter. One, it is very vast, and because it is very vast, it is difficult to remember. I already gave you the solution for this. You have to work in a disciplined manner. And two, even if they learn the entire chapter or even if they remember the entire provisions, still they face the remaining 40% problem. That is, ki, sir, when a question comes, we are on the 40% problem. That is, once you are handling a practical question. Now, the first important step or approach in solving a PGBP sum, which as I said will also be a comprehensive exam question, is what I call as, this is your step one. What have I written? I have written segregation. What is segregation? So since it is a comprehensive sum, since the data given to you will be for all heads combined, and also now try to recall your trading P&L account. Till the date, you have not studied your income tax subject. That is until you came to Inter and started studying income tax. Prior to that, you were studying accountancy right from your standard 11. Since the days of accounting, you have understood or you have minds that you will directly get the total income of a person, which we call as net profit in accounts. What I mean to say total income? Total income means you never studied or you never had the concept of five heads in the accounts. Please remember this. This distinction is very, very important. That when you look at accounts, account will show debentures also, interest on debentures also, which is part of other sources, dividend on shares, which is part of other sources. It may also show you profit on PGBP income. So all put in one trading P&L. And then you get the net profit, which is also not income or profit of any one source. It is a combined income or profit of all five sources. I hope you're understanding this. Now, what is your requirement. Your requirement number one is to segregate. Okay, this is part of PGBP. This is part of other sources. This is part of capital gains. So your first step is to segregate, identify which income and which expense is for salary, which income, which expense is for house property, which income, which expense is for capital, which income, which expense is for other sources. So that from this one single data, which is trading P&L and some additional information, you will be able to do your entire computation, which is required in this format, that is headwise format. So what I will do, on the basis of this data, I will start preparing working notes in which I will say income from salary. Now here what I'll do, I'll follow the format of salary income. What basic, DA, etc., etc., which will give me gross salary, then deduction under section 16, which will give me income from salary. Similarly, I'll go to my second working note, which is income from house property. Now, for this income from house property, again, I'll follow the format, which is GAV minus municipal tax, NAV minus standard deduction and other deductions, that is for interest, and I will get my income or loss from house property. Now, the next working, which is related to this chapter, is now how to do this. This is what we are going to study after this, but just completing my point, income from capital gains. Again, you'll follow the format. And last, income from other sources. So every head is having a specified format. We have studied two out of this till now. Remaining three you will be studying. But what I'm trying to tell you is that you have to first understand the step one. You have to first apply the step one. That is, out of the total information given, which is given as one trading P&L, you should be able to identify, okay, I will cover these items in salary head. So you will have to pick both from debit side and from credit side, what all things pertain to salary. Now it may happen like in this question, there is nothing pertaining to salary either from the debit side or the credit side. So, okay, this person is not having income from salary. Then I will go to all those details which pertain to house property. So again, from here, I will identify, let us say here it is given rent received from property. And here in the expenses, they have given municipal tax on property. So you know that, okay, these two items are pertaining to HP head. So you will consider those here and using the format or the provisions of that particular chapter, you will compute its income or loss. So my first step at or for this chapter of business head is to keep in mind one thing, that business head sum will not come like a salary sum or a house property sum in which you are only given details of that one particular head. Just recall why I'm giving example of salary HP only, because capital gain and other sources are yet to be done. But again, capital gain other sources, generally sums are only giving details of that particular head. But when you come to PGBP, the details given may not be only of business. This is what I'm trying to make you understand. It will be your accounting trading P&L, and you should also keep in mind that till the date you came to income tax, you were having an impression that a person's income or loss is a total income or loss. But the moment you started studying income tax, you realize that no, a person's income or loss can be divided into five sources. So maybe in one source the person may be having a loss, but in other two sources the person may be having income. So you now are dividing the income of that person into various heads or sources and then computing the income or loss for each head separately. Now for this, when you will be solving a comprehensive sum like this, where trading P&L and additional information will be given, your first job is to segregate, or you can also call it as identify which income and expenses given in the data pertains to which head. So step one is segregation. And once you have done this, step two is now computation following the provisions of that head. So you have studied salary. So whatever details of salary would be given, once you have segregated that, once you have identified that, now taking those details, you will go to your salary chapter provisions, which you have studied, which you have learned, and you will start applying whatever you have studied. That is how to compute gratuity, how to compute HRA, how to find out the figures of leave, travel concession, or of various perquisites, and applying the provisions, you will compute that particular head's income or loss. So there are only two steps. What are those two steps? Step one is segregation. Step two is applying the provisions. Now, when I'm talking about business head, obviously now what you have done, now see, interestingly for business head, from this comprehensive sum, you'll only identify what are the income expenses of remaining heads, salary, HP, capital, other sources. Balance whatever is left in trading P&L is by default of business. So when you are having a comprehensive question like this, first tick, okay, this is for house property, this is for capital. Remaining all other items in the trading P&L will be now for business head. So that is our first step. So first step is segregation. So both on the credit side of the P&L and on the debit side of the P&L, you have to identify as to what items pertain to which head. So step one is identifying or segregating both from credit side of P&L and from debit side of P&L. And once you have identified this, you will take the respective items in the respective format, compute their income losses. Now for PGBP, out of the total P&L. Now see, again I've given here P&L. Once you have identified that, okay, these are the items for other heads. So you will not be considering it here. That is why you'll see the striked out. Why? Because they are pertaining to other heads. And then only what is left out, which is remaining to business head, that only you will consider, and taking those values, you will compute your PGBP income. Firstly, is the approach clear, or have you understood how the questions will be and what should be your approach? If anybody has any questions in this, please let me know. Yes, students, I've got inputs from 4 students. Others, please let me know if you have understood or not. Just a moment. Super. So all of you all have understood. So now let us move forward. So your first step in PGBP is segregation. Because for PGBP, the question would always be or majorly be a comprehensive sum. Now, it may happen that in this same question, that is the trading P&L given like this, they may ask you to compute only PGBP income. They may not ask you to compute all the income. That is possibility. It is not that from this question they will ask you to find out all always total income or total tax. They may be asking you to only compute PGBP income. Fine. Still, your first step remains same. That is segregation. Only what will be the difference then? I will not be preparing these formats. I will only prepare the PGBP format. So there is a possibility that from the given data, you are not required to compute any other income. You are only asked to compute PGBP. That is fine for me. Is this clear? Now, I come to the main part. So once you are able to understand the approach of segregation, now comes step two. Now, what is this step two? I call this as apply the provisions. Apply the provision means whatever is the data pertaining to your head, here PGBP. For that data, now you have to do PGBP computation by following a format. And in that format, you have to keep on checking what is the rule given, what is the provision given in the Income Tax Act for that particular item, do the computation and find out the answer, like what you did for salary and HP. So my second step is apply PGBP provisions. In other words, now we'll be talking about this. Now there are two approaches to prepare or find out PGBP income, or you can say there are two formats. Format one is you again prepare a P&L, but now I will call it as the PGBP P&L. So there are two approaches for computing PGBP income. So first approach is you again prepare P&L, but I call it as PGBP P&L. Now what is PGBP P&L? So you already know how to prepare a trading P&L in your accounts. Now a PGBP P&L means you will only take those incomes like here and those expenses which are pertaining to business here. So I will not take all the items. I will take only the business head items. So I will not take all the items. I will take only the business items. And now as you will proceed with the chapter, you will find out that for different items, the provisions have made some specific calculations, like same what you did for salary. You had a different calculation for HRA, you had a different calculation for gratuity. Here also there may not be calculation. In fact, what is very good about this chapter is solving is much smaller and faster as compared to your PGBP. Sorry, as compared to your salary. So even though the chapter study wise is much lengthy, but solving wise it is much easier and faster, because you don't have to do calculation for each and every item what you are doing in salary. Here, there are provisions for different items. You have to just apply the provisions and try to find out what amount I should take here. These amounts will be determined as per the PGBP provisions, which we are going to start after 5-7 minutes once I've explained you the entire format. So what is my first approach or first format? Let us call it as the PGBP PNL. But this format is rarely followed. This is actually more comfortable for you. You will find initially, "Kinene sir, this is so simple, let us follow this." But generally, this is not followed. What is followed is the second format. Now you'll say, "Sir, why we are not following it?" Because we are very comfortable with this. We know the accounting trading P&L. The reason is, first, if you follow this format, it consumes more time because you have to redraft the entire P&L again, taking the business items, obviously with calculations wherever required. So it takes more time. But that is not the main problem. The main problem is many times in the question, entire trading P&L account may not be given. So when we proceed with the practical sums, you'll find that within sums also there are different types of sums, or broadly two types of sums. One is this entire trading P&L is given with all the additional information. Two, information is given, not the entire information. Now, this format is workable only when the question gives you entire trading P&L income, entire details. But many times, as I said, the approach or the type of question in the exam is different. It is not giving you some information that, okay, following items are included in P&L. They are not giving you entire P&L. In that type of sum, your first approach cannot be applied at all. Correct? And for that, you have to follow the second format. Mehak beta, I have not written anything yet. Don't worry. I am just giving you simple examples. So what I've written on the debit side is purchases, sales, rent. So commonly what expenses comes on P&L debit side, that is what I've written. But anyways, this, as I'm saying, this format is not important. So don't worry. I've written the short forms of your expenses. See, purchases, salary, rent, etc. Fine. Yes, Anil. So we have to prepare IT Act and we have to follow the IT Act provisions. That is what we are going to study henceforth. Now, student, comes the most critical point. So what is our format? So first format was P&L format, which, as I said, we do not follow. The second format is the reconciliation format. Now we have been preparing reconciliations right from our 11th standard days, which I normally called as our childhood days. Why childhood? Because for commerce, 11th and 12th is your childhood. Now, right from our childhood days, we have been studying and preparing reconciliation statements. And let me tell you, in the field of accounts, reconciliation is one of the most important tools, because in many chapters, many subjects, which includes costing, which includes FM, which includes accounting, and even tax, we follow the concept of reconciliation. Now, here, what is the reconciliation format? Now, this point is the most crucial point because this is the format we are going to follow henceforth. Now, what is this? See, in the question, you are given this trading P&L. Now, please understand and observe one thing. This entire trading P&L has many items on the debit side and has many items on the credit side. Correct? Hmm. Please pay attention, be very attentive at this point of time. Now, in this P&L, whatever net profit is given, this net profit is the result of total of this minus total of this. Simple. So the net profit figure has all these items added and all these items subtracted. I hope you understand this. Now, what we do for PGBP is we take this figure as our starting point. So I will start here with net profit as per accounts. So net profit as per account means as per accounting P&L. Now comes the most interesting and important part. Since we are following a reconciliation format, you have to add something, you have to subtract something, and after these additions and subtractions, you will get your answer, which is your PGBP income. Now, firstly, what is PGBP income? It is the income or loss only from one source, that is business. Keep this in mind. Like here, this net profit, as I was explaining earlier, is not your income only from business. It is the total of all heads income put in one figure. Why? Because on your debit and credit side, you had figures from all heads. Now, once you have figures from all heads, definitely this amount which you are writing as net profit, the total profit of all heads combined. I hope you are getting this. But now what I want in income taxes, only the profit, only the income from business. Now, if I want only the income from business, what I should do is I have taken this figure as my starting point. What is this figure? This is the total of all items in the P&L. So keep this at the back of your mind. This profit is made up of adding all the credit items and subtracting all the debit items. This is how your net profit figure has arrived. Now, when we were following the first step, that is segregation. In segregation, we said that, okay, this is of other sources, this is of capital, this is of HP, which we have taken already in the other formats like this. Now, definitely, since we have considered it in the other formats or they are relating to other heads, it cannot be considered. It should not be considered in PGBP. So what I will do is I will subtract all these figures from the net profit figure because net profit figure is made up from the addition of all credit items. So I will start subtracting those P&L credit items which are not part of business. I hope you are understanding this simple maths. So what I will do, I will subtract all this. What? Interest on debentures, dividend on shares, profit on sale of shares, rent received. I will subtract all those items here. Interest on debentures, dividend on shares, uh, profit on sale of shares, and rent received. Now, all these items I will subtract because they are not part of business head. They are not part of business income. I hope you understand this. Similarly, when I look at the debit side, I have some items like this. Loss on sale of machinery. This is relating to capital head. Municipal tax paid on property which is let out. This is relating to HP head. I do not want this in PGBP. Please understand, when this net profit figure is calculated in accounts, it is adding all this on the credit side and it is subtracting all this on the debit side. Now it means while calculating this net profit, these two items are also subtracted. So this net profit is derived after subtracting these two expenses. Now, since these two expenses are not part of business, let me add them back. Loss on sale of machinery, municipal tax on property which is let out. Now, what will be the effect of this? I have subtracted those items which are part of my P&L credit side, right? But which are not part of PGBP income. So let me subtract it. Why? Because they were added in this net profit figure. Similarly, these two items on the P&L debit side again are not part of business head, but they were subtracted while computing this net profit figure. So let me reverse it. Let me add it back. This is the simple reconciliation concept. So I am taking this figure as a starting point. So what is the logic of reconciliation? Now this logic is applicable to all reconciliations. You do of any subject, any chapter, the logic is same. I am taking this figure as the starting point. Now in this figure, many items are added and many items are subtracted. Now, from our accounting perspective, all the items on the P&L credit side are added in this net profit. All the items on the debit side are subtracted from this net profit. I hope you understand this. Now, when I have these different items which are added or subtracted, and I have now identified that, okay, on the credit side, these incomes are not to be included in business head. So what I've done from this net profit figure, which is my starting point, I have subtracted all these items. Why? Because I do not want these items in PGBP because they are not related to business. Similarly, in this net profit figure, these all items were appearing on the debit side. That is, they were subtracted while computing the net profit. Again, I don't want these items. So let me add them back. Now, when you are adding or subtracting, what you are actually doing is you are nullifying the effect. So from this net profit figure, these items were subtracted. So let me add them back because I do not want these figures. So when you are adding or subtracting in the reconciliation statement, what you are doing is you are doing the opposite. So this is what is reconciliation. You are nullifying the effect. So we follow the reconciliation format for PGBP computation. Though this is also available, we do not follow this format. We follow this. So what is this format? Starting point is net profit. Then certain items will be added, certain items will be subtracted. And after doing that, you will reach your PGBP income. Students, is this reconciliation format or concept understood? Mehak, net profit as per accounts is always given in this income tax question because here we cannot spend our time first preparing accounts, finding out accounting profit, and then proceeding. No, it is given. Your starting point is the net profit as per accounts given in the question. Then students understood? Super. Now, when you have to follow this reconciliation format, remember one thing that we have to do the segregation step, that is identify those items which are not related to PGBP. For that also we will do add less to remove their effects. But at the same time, we have to also follow the second step. What is the second step? It is applying the PGBP provisions. What is applying PGBP provisions? Now, when you study the PGBP head sections, you will find that for different items, there may be some calculations given how to arrive at the figures of those items. Like if I have to tell you with the example of salary or HP, like in HP also, you need not take the rent as the GAV. There is some calculation given for GAV. So whatever rent is given, you first do the calculation, whichever is higher, whichever is lower, and you find out the GAV. One second. Right? So basically, what have we done? We have done some working for different items. Similarly, in PGBP also, here in the reconciliation format, one, you have done adjustment for those items which are not business head items. Second, those items which are business head items, like example, purchases is part of business head, yes, salary is part of business head, yes, rent, rates, taxes, depreciation, all this is part of business head. But the amounts which are given here, please understand this, pay attention. The amounts which are given here are amounts calculated as per accounting provisions. So you have accounting standards, you have different calculation in accounts. So like for example, depreciation, we have calculated as per the SLM method at the rate of 20%, for example, which is an accounting method. However, this depreciation under income tax law is calculated in a different manner. Now there is a possibility that this depreciation, which is part of business only, no doubt. Why? Because this is depreciation on your plant, machinery, factory building, etc. But the figure is 2 lakhs. This figure is as per accounts. Now, when you do the same working of depreciation in income tax, you find that the amount as per income tax is, let us say, 2,50,000. Now, this either will be given in the additional information. So, additional information, if they don't want you to do calculation, they will simply say depreciation as per income tax is 250. Or they will again in the additional information give you details like what is the cost of asset, when this asset was purchased, everything. And you have to do the working of depreciation as per income tax calculation. So either this 250 will be given as additional amount, as additional information, or the details for calculating this 250 will be given and you'll make one more working note calling it as calculation of depreciation. Now, my point is this depreciation is very much part of PGBP. Why? Because it is relating to business assets, so it should come in PGBP, correct? But after I apply the PGBP provisions, after I do the PGBP calculation, I find out that there is difference in amount. As per accounts, it is 2 lakhs. As per PGBP calculation of depreciation, it should be 2,50,000. It means there is a difference of 50,000. Now, this difference also has to be adjusted. Again, why? Because this net profit, which is your starting point, has been calculated by taking 2 lakhs as depreciation. Whereas income tax says for our calculation, the depreciation should be 250. So now, when you are taking this net profit as the starting point, please remember this net profit is by taking depreciation as 2 lakhs. But we need depreciation or we have to take depreciation of 2,50,000. Now for this, what you will do? So first approach, which is slightly lengthy, but which is foolproof approach is debit the depreciation as per accounts. This amount is debited in P&L. And as I was just explaining, whatever is debited in P&L is the amount which has been subtracted from the net profit. So since it has been subtracted from the net profit and in subtraction, you subtract depreciation as per PGBP, which will be 250, the amount as per the calculation of PGBP. Now, what we have done, we have given effect of both figures. The depreciation, which is already debited in P&L, I have added it. And the depreciation, which either is given in the question in the additional information or which you have calculated by doing the working note, which is your depreciation as per PGBP, you subtract it. Automatically, the net effect of 50,000 is achieved. So, when you are doing PGBP computation, one, you will have to remove the effect of those items which are not related to business by this reconciliation add-less approach. Plus, for those items which are part of business, which are related to business, you have to check how much amount Income Tax Act is saying for that particular item. Either that amount is given or you have to calculate that amount and then give effect of that amount also. Students, I hope you are understanding this. So there will be adjustments in this reconciliation for two reasons. One, either it is not part of PGBP at all, so that has to be adjusted in reconciliation, or it is part of PGBP, but the amounts of PGBP and accounts are different. Correct? So one example I gave you of depreciation. Let me give you one more example. So let us say the figure of salary, which is debited in your P&L, is rupees 25 lakhs. Now, PGBP says whatever salary you have paid to your employees, your directors, your accounting staff, your marketing staff, all that is 25 lakhs. But in PGBP head, when we will study the provisions, you will find that there are some conditions and restrictions for these expenses. Now, if you do not satisfy a particular condition or restriction given in the PGBP law, they say we will not allow you to take that expense. I repeat, there are some conditions given in the PGBP head. You have to satisfy those conditions. You have to comply with the restrictions given. If you fail to do that, income tax law says, or PGBP head says, sorry, I will not allow you that expense. Now, accounts says salary is 25 lakhs. But in additional information, they have said that out of 25 lakhs salary, rupees 5 lakhs is disallowed. Means the business head or the PGBP head is not allowing. Why? You may not have satisfied the condition for that 5 lakhs. You may have not complied with the restrictions given for that 5 lakhs. What are those conditions, restrictions that you will study when you go to the detailed PGB provisions? But for the time being, I'm trying to tell you what are the types of adjustments. So like for depreciation, the calculation is different. So you do the calculation and find out the PGB depreciation. Two, second type of adjustment is for certain expenses, you have not complied with the conditions. You have not satisfied the restriction. Now, if a condition or restriction is not satisfied, PGBP Act will not allow that particular expense. PGBP head will say, sorry, you cannot take that expense. Why? Because you have not satisfied our conditions, which is logical. Now, this is what is called as disallowed. Disallowed means PGBP head is not allowing you that expense. Now, in this example, again keep in mind, this net profit figure was arrived by taking your salary expense as 25 lakhs, right? Now, salary expense of 25 lakhs is what is subtracted while calculating this net profit. However, out of 25 lakhs, they are saying 5 lakhs is not allowed in PGBP because some condition is not satisfied. It means what? Net profit as per accounts has deducted 25 lakhs, whereas the PGBP income allows you only 20 lakhs. Understood? So income tax accounts having different figures. Account having 25 lakh salary, income tax says, PGBP head says, no, no, only 20 lakhs is allowed. I will not allow you that 5 lakhs. Why? Because you have not satisfied our conditions. Now what you have to do is, again, you have to do adjustment for this 5 lakhs. Again, one approach is you again add less the entire figures like I did for depreciation. But generally, we do not do this for every expense. Why? Because it will be very lengthy. So the second approach is simply you add the amount of disallowed expense. So whatever salary is disallowed, that is not allowed in PGBP, we will add that amount. So there are two approaches in this reconciliation. One, take the full values, add less, automatically the difference is adjusted. Or second approach is directly take the difference and either add the difference or either subtract the difference. So here, since I had subtracted in accounts 25 lakhs, but income tax says no, only 20 lakhs has to be subtracted. So this difference of 5 lakhs is added back. So students, this is how you compute your PGBP income by this concept or format, which we call reconciliation format. If you have understood this, we will first start with some basic sums for practicing the format. First, we will do that. Then we will go to our PGBP technical concepts, that is in detail the PGBP provisions, which will tell you what are the conditions, what are the restrictions for each item of income and expense. But before that, this is the format how you will compute PGBP income from the trading P&L account given. So what is the format? Format is start with net profit given in that account trading P&L and add and subtract those items which are not part of PGBP. The balance is PGBP income. Now, for doing this addition subtraction, you have to follow two steps. First is segregation, that is out of this, find out those items which are not related to business head. Two is now apply PGBP provisions. What is applying PGBP provisions? As I gave you two examples, one of depreciation, one of salary, that when you study the PGBP provisions in details, which we'll study after this practice of sums, you will come to know what are the conditions, what are the restrictions, which you have to first satisfy, then only that amount can be taken in PGBP. Now, when you apply these PGBP provisions, when you apply these PGBP conditions, some items will give you a different amount, like depreciation is giving different amount, purchases may give you different amount, salary may give you different amount. Then considering the difference, you'll have to also do adjustments of the difference. Fine, students? Understood and clear with everyone? So let me take you to the practicals. So see, I have taken these two sums. Do one thing, I'll be sharing everything. This I'll share today itself. But for the time being, you can take a screenshot of this. 1 second. One second, I'll just zoom out. Yes, is the whole question visible? Yes. Student, just take a screenshot, please. Should I still zoom out? 1 second. Yes. Students, please take a screenshot. So there are two questions, question one, problem one, and question two. Now, let me go to question one. What is given in question one? Following in the profit and loss account for the year ended 31st March 26, furnished by Mrs. Pradnya. So you have expenses, salary, advertisement, repairs, depreciation, personal tax, GST, legal charges, audit fees, customs, loss on sale of machinery, admin expenses, net profit. And you have on the credit side, gross profit, interest, dividends, profit on sale of shares, salary, sundry receipts, gift from close friend. And then you are given some adjustments. Now, students, first, I'm giving you 2 minutes. What you have to do in 2 minutes? Just identify those items from the P&L. Don't look at the adjustments for the time being. Identify from the P&L those items which are not related to business head. Like, I'll give you example. This interest is not related to business head. So identify those items and in front of that write, I'll just show you 1 second. So what I want, I'll show you. See, so what I want you all to do is first identify those items which are dealing with some other heads. Like GP, I know is part of business head, but interest on fixed deposit is of other sources. So write OS. Dividends is other sources, right? OS. So just mark these items. Now, obviously, you do not have anything printed, but just in your mind, mark those items both on the credit side and the debit side, which are not of business head. Chalo. Go through them, mark them in your mentally, just make a note of which items, according to you, are not business head items. So we are doing our step one, which is segregation. Sure, I give you 2 minutes. Only question one. Very good, Anil. Yes, Ashok. Good. Super. Now, how do we solve it? Same. So what is our solving pattern? Our solving pattern is we have to follow this reconciliation format. So I'll write over here question one. Now see here, you are not required to do computation of comprehensive income. We are only computing PGBP income. So I'll call it as computation of PGBP. If it would have been comprehensive, my format would be like this. Then I'll have to find out each and every income, then GTI, then deductions, and then taxable income and tax. So this is comprehensive format that we'll do later. First, only PGBP. Now, what will be my starting point? It will be net profit as per accounting P&L. And then I have to add certain items. I have to subtract certain items. Now, how much is my net profit as per P&L? So the net profit as per P&L is 2,13,000, right? So that will be my starting point, 2,13,000. Now I will identify on either side. So I'll start with credit side first. So this is other sources, this is other source, this is CG, this is salary head, this is, now see, sundry receipts, you cannot say whether it is of PGBP or not. For this, you need to read the adjustment. So that we'll do later. This is again other sources. So let me first deal with those items which are crystal clear. So these six items or five items, I should say, are definitely not part of business head. Now, these are all on the credit side. On the credit side means they are already added in my net profit. But I don't want it in my net profit because I want profit only from business. So mathematically, to remove the effect of this from my net profit, I will have to subtract them. Correct? So interest is 19, dividend is 6. Let me just write. I'm just putting the short names for the sake of saving the time. So interest is 19, dividend is 6. Definitely you write the entire thing, interest on what, dividend on what. Then profit on sale of shares is 15 and salary received is 25. So profit on sale of shares and salary. What are the amounts? 15 and 25. Sorry. See, I've made one clerical mistake. What is a clerical mistake, students? These are all supposed to be subtracted. See, even such things happen in exams. In the haste of solving, we are at times making these clerical mistakes. So less interest, dividends, profit on sale of shares, right? 19, 6, 15, 25. Twenty-five is my salary received. What else? Gift, 75. Okay. Now coming on the debit side. On the debit side, what items are not part of PGBP, right? So salary is PGBP, Advertisement is PGP, repairs, depreciation, rent rates, and taxes. Till this point, no problem. Personal tax. See, personal tax has nothing to do with business. As the name suggests, it is personal. Now, whatever is on the debit side, keep in mind it was subtracted from the net profit figure. So, if it is subtracted from the net profit figure and I want to remove the effect of it, so I'll have to add it. So, personal tax, I'm adding 9,000. I'm just putting across, means it is not part of PGBP, right? Yes, this loss on sale of machinery. Loss on sale of machinery. 40. Correct. Admin is fine. Interest on capital, bad debts, net profit. Now see, interest on capital. Now this you have studied in accounts also. You cannot pay interest to yourself. You cannot pay rent to yourself because you are the giver, you are the taker. So this is no transaction in the eyes of accounts also and income tax also. So this also I'll have to add back. Had this interest being paid to outsider, it was fine. But interest on capital, which is nothing but you paying interest to yourself, it is not a real expense. Please understand this. See, any item to be covered under income tax has to be your real income or expense. If it is not your income or expense at all, then it cannot be covered. So 7,500. Fine. So broadly, what I've done is I've done my step one. Step one is I've segregated, I have nullified the effect of those items which are not part of this head. Now, remaining items are broadly business items. Perfect? Yes. However, for remaining items, I'll have to check the PGBP provision. What is the PGBP provisions? That you are going to study after this. But for the time being, I have kept the sum simple because I wanted more focus on the format practice. Now I will read each of the items and try to find out from the adjustments given or the additional information given that whether it is a business item or not. See what is given. Salary includes 3,000 paid to domestic servant. Now please understand this. Just think logically first. You have not yet studied PGP provisions, no problem. But logic, if something is not part of business, why? Because it is your personal expense. How can I consider it in PGBP head? So, salary which you have paid to your domestic servant, definitely this cannot be part of your business item. Now, salary is debited. Debited means it is already subtracted in net profit. So, to nullify the effect, I have to add back. Similarly, repairs. Again, out of the total repairs given in the question, 3,500 are personal. Why? Because they are dealing with your residential house. Now, these are all personal expenses. How can personal expenses be allowed? It is definitely disallowed. Disallowed means it is not allowed. So these items I will add back in my reconciliation. I hope this is clear. So salary 3,000, repairs 3,500. DS is domestic servant. And repairs to residential property. Now comes those adjustments which are purely PGBP provisions related adjustments. Now these provisions we are going to study henceforth. So you'll understand, like here directly the figure is given of 42,000. How 42,000 is computed, that we'll study, but for the time being. So what is given? Depreciation as per income tax is 42. What you can do is simply one, you can do both, add less. What add less? So depreciation as per accounts is 36 and as per income tax is 42. So generally what we do is whatever depreciation is of accounts, put it in add. And what is the depreciation as per income tax provisions? Subtract. So the net effect automatically is achieved what we want, right? Yes, Vishaka, we can also directly give the effect of the net amount. That is also possible. Mehak, rent is not to be adjusted here. Why? See, now these are interesting points. Students, I'll just clarify this. Good point, Mehak. So see, you have a debit item called as salary. You have a debit item called as rent. Now, whether this rent is part of other heads, like salary will be part of salary head, rent will be part of HP head. Answer is no. This is very much part of PGBP head. Why? See, when you have income from salary head, you have income from house property head, they are talking about this. Like, see, this is the salary income. This will go to salary head. Here, if you have rent from any house property, like let us say it is not there, but for example, here you would have had rent received from HP let out and some amount. This again would have been adjusted in reconciliation. Why? Because these are incomes from other heads like salary, like house property, have to be adjusted. But when you have salary on the debit side, rent on the debit side, these are what? These are expenses incurred in business. Now, this salary is paid by you to your employee who is employee of the business. So this is very much a business expense. The rents and taxes are the rent which you have paid for the shop or the godown which you have taken on rent. This is very much a business expense. I hope this is clear, Mahek, and even to others. Aditya beta, adjustments are saying that as per income tax, the depreciation has to be 42,000. See, it is given here. So income tax calculation, which we are going to study later, gives depreciation as 42,000. Whereas in accounts, as per accounting calculation, the depreciation, where is it gone? Yeah, is 36. So I have to adjust the depreciation. So what I did, one approach which I have followed now is add the entire P&L depreciation because it is on the debit side. So add it entirely and subtract what is given of PGBP, which is 42. Right, beta? Yes, Mahek, you're right. So Shmita, loss on sale of machinery, it is part of which head? Capital head. Hence, we have to do the adjustment. Mahek, you are saying because you said pro forma that not allowed. No. Please understand, but a depreciation is a business expense. Yes, because once you are using machinery or any asset in business, it is a business expense. But the calculations are different. Accounts follow one logic, one calculation method. Business head follows another method. So there will be difference in amount. So we have to adjust the difference in amount. So one approach is take the total figures, total accounting depreciation add, total PGBP depreciation less. Second approach could have been take the difference and adjust only the difference. Anil beta, I already explained interest on capital. Why it will not come in PGBP? Because try to recall accounts. You cannot pay interest to yourself. You are the owner of the business. Can you show that you are making some expense with yourself? That is what is not allowed. Hence, it has been adjusted. Fine, beta Anil. Now, again, see, all these are from point number 3 onwards. All these are adjustments as per PGBP provisions. Now, see the second one. So, what is the second adjustment? The second adjustment is administrative expenses, which is already here. See, total is 35. It says out of this 10,500 is disallowed. What is 40 clause A? This is all what we are going to study later today. But for the time being, they have directly said that you have not satisfied some condition. The condition is given in 40A. You have not complied with some restriction which is given in 40A. Hence, income tax is not allowing you the expense of 10,500. Now, this amount will be added here. 10,500. Now we'll say, sir, why you have added it? See the simple logic. What is the logic? Again, in your accounts, you have debited the entire administration expense. Total is 35. Yes, you have debited it. Debited means while computing this net profit, this entire 35 is subtracted. See, simple maths. Nothing technical, nothing very out of the mind. It is simple maths. So out of 2,13,000, sorry, this net profit of 2,13,000, how did you arrive? By subtracting the entire 35,000. Now, out of this 35,000 only, some figure of 10,500 is not allowed in income tax. Why not allowed? Because later on we'll study the provisions where you'll find there are some conditions, restrictions given which you may not have satisfied. If you're not satisfying my conditions, I'll not allow it. Now, since this is not allowed, it means income tax, now see, I'll give you this, is allowing you a lower figure. So as per income tax, how much administration expenses is allowed? 24,500. How did I get it? I subtracted 10,500. So total is 35. But out of this one expense, which is of 10,500, is not complying with my conditions. So I am not allowing it. In short, I am allowing you the balance. So as per income tax, you can take administration only this much, but you have already subtracted this much. So what we are doing to nullify the effect, the amount which is not allowed is adjusted. What is my adjustment? Since it was already deducted, now I want to nullify the effect, so I'm adding it back. Next, sundry receipts. Now see, sundry receipts here, for the time being, I have left it. Why? Because I do not know whether it is of business or not. So they have given some adjustment to understand whether it is of business or not. So it says it relates to sale of scrap, which is arising from business. Now, after reading this adjustment, I know, okay, this is relating to business, no doubt. Had it said कि sundry receipts relates to sale of old newspaper which you are using in your household, or it is sale of some household scrap item, then I would have adjusted it while computing PGBP income, because in that case it would have become my personal receipt. Correct. But here, since this sundry receipts is relating to sale of scrap, which is part of my business, hence it is part of business income, no adjustment required. Next, another item given is an expense of 9,000, which is eligible for deduction under Section 35, is not recorded in P&L. Now, this is interesting. Till now, we were having those adjustments which are there in P&L, but may not be allowed in PGBP. Now we have one adjustment which is not here. So there is no expense debited here of this amount, 9,000, which is a special deduction given under Section 35. Now, what is deduction under 35? Again, students, when we study the provisions, you will get to know what is covered in 35. For the timing, I do not want you to be very technical. First, be practical with the question. First, understand the formatting. Then technical inputs, what is 35, what is 36, what is 40, we are going to study. So there is one expense which is eligible, means which is allowed by the business head, but it is not in accounts for some reason. So account has not taken this expense of 9,000, but we, that is PGBP, allows you to take this expense. Now please understand the effect. See, you have to understand reconciliation. Reconciliation is simple, add less. But how to do add less? So our starting point is net profit. Please understand this. Now, while computing this net profit, have you done anything of that 9,000? Answer is no. We have not taken that 9,000 at all in accounts. No problem. In income tax, they are allowing this as an expense. So they are saying you can deduct this amount when you are computing your PGBP. It means income tax is allowing you to deduct this amount of 9,000, but it is already not deducted. So what I will do now, I will deduct it. So deduction under section 35. So these are all items of less. These are all items of add. So into 13, add all these items. From 213, subtract all these items. And whatever will be left after this addition, subtraction, is your final PGBP income. Students, I hope you have understood this. Right, students? So this is how you compute PGBP. So you take the starting point as P&L of accounts, and following the reconciliation format, we try to reach to PGBP. Students, is this clear to everyone? Super. Yes, Akash, that will study. You are right, but super. Great. So we had a very uh, marathon session of 1.5 hours. So now let us take a break, just relax our minds, just have our biological breaks, and then we come back. And now we will discuss or we'll start discussing the PGBP provisions. Fine, students? So 10 minutes break. Okay, so people have come up with the answers. So the common answer which I am getting is 1,31,500. ठीक है. Some of you have different answers also, but this is the common answer which I got from Vishakha, Aditya, Sushmita, Vijwal. So I believe this should be correct. I have not made the calculation myself. It is a simple maths plus minus. I'm just writing down this common answer. So it is 131,500, right? So students, my purpose was to give you a hands-on insight as to how actually PGBP working happens and what type of sums you can expect. So there is one more sum which I want you all to practice by yourself, which we will discuss in our next class. Now let me take you to this. So we are now going to study PGBP in detail. So what are our two steps of computing PGBP? First is segregation. Second is applying PGBP provisions. Now, for applying PGBP provisions, as I explained, you would be given a trading P&L account, something of this type, which we have already seen. And in that, you'll have different items on the credit side and on the debit side. Now you have to first identify the items which are part of the business head. So as you can see, different section numbers are written. These are the section numbers which we are going to study now henceforth, which will help you identify which items are business items, which are not business items. Also, even if you don't know these sections, like how we did the present question, and there is one more question for homework, where only by simply reading out the names of the items, you will be in a position to identify what is and what is not part of PGBP, right? But today we'll understand each and every provision in detail. So now we are in step two, where you have to apply the PGBP provisions. But for that, you need to know the PGBP provisions in detail. Now, the entire PGBP chapter can be divided into broadly two parts. One is the practical part of PGBP, where all the debit side and credit side related provisions are covered. Two, the procedural part, where maintenance of books, getting the books audited, all those things are given. So we'll understand both these parts, and then maybe you can say third part, some special provisions. So PGBP head can be divided into broad three parts. Part 1, calculation related provisions. Part 2, procedure related provisions. And part 3, some special provisions. Now, I am right now dealing with part 1. That is, we are going to study provisions which are related to computation of PGBP income, which is 90% of the portion. Remaining procedural part and special provisions are very less, right? Now, for the purpose of understanding PGBP head provisions, the computation calculation provisions, I have divided the provisions into two parts, the credit side related or the debit side. Why? Because see, our approach is clear. We are keeping this trading P&L format in our mind. So now we want to know what are the items which are part of PGBP income and what are the expenses which are part of PGBP expenses. This is what is debit side and credit side. So now we'll study what all things will come in the PGBP income. I'm calling this as credit side provisions, and what all expenses will be allowed and how much amount will be allowed. That is the PGBP debit side provisions. So let us start. Now for deciding the PGBP credit side, which is your incomes, which will be covered in the business head or the PGBP head, you have mainly two sections which will decide what incomes are covered. So 28 and 41, they decide what incomes are covered, and then you have a special provision 43CA, which is dealing with a very unique or a specific situation that I will explain. But first, what incomes will be covered in PGBP, that is given by 28 and 41? Let me explain. Now, when we read the the module. Okay, you have to start reading the module, please. Sorry, students. So now, what are the two sections? From today, start reading the what to read. This is what I'm trying. Right now, you have to be in touch with the provisions. So first, you will read the format. I'll show you the module also so that you what how the module appears. And so this is our module. So this format given. See, now they are saying pro forma for computation of inside PPP under the default regime. So get into the default and all regime. I know you all know the two regimes, but for the time being, you understand the format. So what is the format? Net profit P&L. So this is the accounting net profit, which we also understood that is the net profit from your P&L. And then we add items, we subtract items, right? And after these addition subtractions, finally what is left with you is the PGPP. Now here you will much detailed format. Now why it is much detailed? Because as we will proceed with understanding the provisions, you will realize each and every of these points. So today when you are reading this list, more than 50 of lists you will not understand. I'm just informing you prior. So that it should not happen that today you read the list and you suddenly feel, Arey, I'm not understanding. Don't worry. Because until and unless we cover all the provisions of PGP, you'll not understand the list, but just go through the list. Because as we now proceed with the technical provisions, as and when I'll go to the respective provisions, something will hit. Acha, I read this in the list. So let us say something here they have given 30% of expenditure disallowed. Now you know what is disallowed. Disallowed means you have taken that expense in P&L, but income tax says, sorry, I will not allow you because you have not satisfied my expense. This is disallowed. But why it is disallowed? What is the provision? That we are going to start from today, and it will take around 2 sessions to complete the provisions. So today, definitely all the provisions will not be completed, but you have to still read this list. So the first thing that you have to read is this format. This is our computation format. Now then there is a second computation format which is for the old regime. For the time being, skip this. Just read the format of the new regime, which is the default regime, right? And then starts with the theory part. So meaning of business profession, method of accounting, and then comes the first section, which I am now going to explain. You have to read all this. So now what is your homework? One is that some you are going to, so I said you have to be in touch with the provisions by reading them daily. So today you will read the first part, the format, and the second part that you are going to read is all this introduction point. That is what is the meaning of business profession and what is the method of accounting, etc. I'll explain them, but I'll explain them as per my sequence. But you have to read it today itself. And this section 28, which I am right now explaining. Now, there are only two sections which tells you what will come in the P&L credit side. Only two sections. One is section 28, the other is section 41. Right? Meg, is still my video not working? I think it is. In fact, that is what I did when I just paused now because there was some technical error coming showing me also. So I just changed my internet connection. So now I think my video should be much clear. Yes. So section 28. If I have to explain it to you in very simple common man language, it says receipts arising from business. So what does this section covers? It covers all those receipts that will arise out of business. Please understand this. So 28 is dealing with business receipts. Now it is very simple to write it in one line, but when you read this module, see the list. There are so many items given in this list. Why? I'll explain. See, basically section 28 is what? When you are doing business, obviously what will come in my PGP income side is only those incomes, those receipts which I get by running my business. Like, I would like to explain this with the perspective of our practical question that we just solved. In our P&L credit side, you had other receipts also, like receipt of interest, receipt of dividends, receipt of rent from let out property. Will they be part of PGBP? Section 28 says no. Why not? Because is earning interest, is earning dividend, is earning rent your business? Answer is no. If it is not your business, then how can it be part of section 28 and PGBP? It is not. So that is why the first most important section, in fact, this is the charging section of this particular head, that is PGBP head, which says what will be covered is only those receipts which accrue and arise out of business, that is by running business, by doing business activity. So when you're doing a business activity, from this business activity, you are realizing various types of receipts. Example, so if you are into business of manufacture or trading, your business receipt will include sales. If you are into your profession like doctors, lawyers, chartered accountants, it will be fees. Now within fees, you can do breakup. For chartered accountant, it will be consulting fees, audit fees. For doctors, it will be consulting fees, operating fees, etc. Many things. Then, if you are into the business of transportation, your receipts will be freight because this is your income, your receipt. If you are into coaching classes, your receipt will be your tuition fees. sale of books, all these things. So, depending upon the nature of business, you may have different receipts arising out of your business. So what is important is when you're doing business, Section 28 says, check out for the receipts that you are earning by running your business. This is what is Section 28. Now, this is the simplified Section 28. What is the technical Section 28? This is what is given in this list. I'll just run through this broadly. So first, it is also saying income arising from business, which I just explained. Now it is covering some special items. Now, what are these special items which is covered? So first is compensation. Now, interestingly, what does Section 28 says? One is regular receipts by doing businesses, which I just named in my notes. Those are point one. Now, what is this point two? It says at times when you are doing business, you may receive certain amount which may not be received regularly, like this compensation. But since this compensation is arising out of business, it is relating to business, we will treat this also as business receipt. Now, see, students, for your exam purposes, that is for practical sums, whatever we are reading here is not required. This is theoretical, but this is very important for your theoretical side of understanding and also for those special MCQ type of questions where one of these items would be given in MCQ and you would be asked under which head it is covered. So at that time, this part will be required. But for your regular practical sums, this part is not required because in regular practical sums, it will be covering sales, etc., etc. Right? Now, what is given? So this second item is compensation. Now, what type of compensation? So it says that whenever you have to forego any of your activities, and for foregoing that you are receiving compensation, that will be covered over here. Now, what are the activities that you are doing? You are managing the business, the affairs here means the business either of Indian company or foreign company. And now what has happened, there is termination of this role or there is modification in the terms. So in short, you are running a business. Now, if you remember, there was a time which was called as nationalization of banks, where the government took over the private banks and made it nationalize. Similarly, you have times where the government say that, okay, this particular activity which you are doing is crucial to economy, is crucial to the country as a whole. So you will not manage it, I will manage it. So till now, what you were managing, that management is taken over by somebody else. Generally, it is by the government. So it is how? By terminating your managing, by modifying your terms of management. And why you will forego this? Because I am paying you a lump sum compensation. Second, second termination is of your agency business. So you are running an agency business. Again, I terminate or I modify the terms of this agency. Now, whenever I'm terminating or modifying the terms of this agency, again, this will be covered in business because it is arising out of some business activity. Similarly, you are giving to the government. What you are giving to the government? The rights which you are having. What rights? Of managing a property or managing a business. Like you'll find that in these places like Udaipur, Jaipur, you had these palaces. Now these palaces are owned by the earlier times emperors. Today also their legal heirs are owning those palaces. But the government says, now we will be managing the palace. Why? Because it may be considered as an architecture of national importance, or we want to use it as for promotion of our history. So the government has taken over the management of that property. So such takeovers by government, whereby your rights of management is taken over by the government, they pay you some compensation. So whatever compensation you are receiving, in relation to giving away any what your managing rights in any company, your agency rights, or your management of any property or business, or another thing what you are giving is by whatever manner you have agreed to termination or modification of any business contract. So see, these are some very special items, students. These things maybe till date you not have heard of or seen of, because these are one of the items. These do not happen regularly. This may happen once in lifetime, where your business running, your managing business rights, any of these are taken over mainly by the government, and they give you compensation. That compensation is again business receipts. The third item again, which is specific, is where you are any trade body or a professional body. Now, this is like our ICI, and it is providing specific services to members. So today I'm a member of ICI because I've completed my chartered accountancy course. So I attend some program run by the ICI for my knowledge upgradation. So let us say there is some program happening on IBC, there is some program happening on FEMA, and I want to get more knowledge. So I attend that program and there is some fees. Now, these are the specific services which this trade or professional body like our ICI is providing to its members. So, what this is point 3 says that whenever a trade or profession body is providing any specific services to its members for which obviously it is charging some fees, that will be part of business. Now, this is a common about items. Now, what business? Now, what is this item? I'm running an export business. Students, am I audible? So I'm running an export business. Now, when you're doing exports, government provides you different types of incentives. So these incentives may be in relation to some import licenses. So you are given import license, you don't need that import license, so you sell the import license. Now, when you are selling the import license, the profit that you cannot get on its sale. One. Second, another benefit that export businesses or exporters have is government may give them some cash assistance. Now, this cash assistance, you may call it as subsidy also. Third, whatever duties or taxes you have paid, the government refunds you back those duties and taxes. Why? Because you have exported those goods, take back the duties, taxes which you have paid. Similarly, same like this first sale of import license, you are selling again some duty credits which the government has given you. Now, all these are benefits which are derived by people who are into exports. So when you're into export business, you derive one or more of these benefits. Again, since these benefits are indirectly arising out of your export business, hence the law says we will allow you or we will treat this as your business income because they are arising out of your export business. Now, fifth item. What is this fifth item? Now, this fifth item is very interesting, though it is very broad item. Whenever you are doing a business, you directly receive some income, that is business as per our first point itself. But many times you may not receive benefit directly, or I should say monetary form. You may receive it in non-monetary form, like in the form of some perquisite. Now, whenever you receive any benefit, which may not be in monetary form, but again, it is arising out of your business or profession, it will be treated as PGBP income. I'll give you an example. Now, you would be knowing that many times when you are having franchisee or when you are having dealership of some branded companies, they give you some targets. And if you have achieved those targets, they give you some incentives, some perquisites. Like many times, there is a target that if you sell so many TV sets, let us say you are LG company's dealer, and they have given target that if you have sold more than 1,000 TV sets, I will give you a bullet. Now you achieve that target, so this month you receive a bullet. Second, they have given you annual target of selling more than 10,000 TV sets, and if you do that, you will have a family trip for yourself and your family for 8 days. your tool. Now, these are the benefits or perquisites which are arising out of business. Again, what they are saying is this may not be in money form. This may be in the form of some benefits or like foreign tour, some car, some gold coin. Many times you receive this as part and parcel of your business. Because you are doing a particular business, you had this particular scheme, some type of targets, you achieved that, you got that particular special benefit facility. Again, PGBP head section 28 says it will be treated as your business income. Next thing, this is applicable whenever you are doing computation of partners. Now, when a partner in a partnership firm, if you remember, we have done partnership accounts. You pay interest to partners, you pay salary or remuneration to partners, and you also pay net profit to partners. So broadly, a partner receives three things from its firm. So while preparing profit and loss account of the firm, you have commonly debited these items. This you have done in your partnership accounts, accounting sums. Now in that, PGBP head says, as a partner, when you receive interest or salary or remuneration and even share in profit from your own partnership firm, all these three are considered as your PGBP head income. So a partner in a partnership firm will treat these three items not in any other heads. Like interest, it will not cover in other sources. Salary remuneration receive, it will not cover in salary head. It will cover all these items in the PGBP head. So when a partner's computation of income you are doing, you have to keep in mind that the partner receiving any of these items from his or her firm, it will be treated as a PGBP item, PGBP income. Now, out of these three items, whatever share in the net profit the partner is getting, we generally divide the net profit in the PSR, profit sharing ratio. Now, whatever is the share of this partner in the PSR, it is part of PGBP head, correct? But at the same time, it is exempt. Why it is exempt, you need to understand for the simple reason that it is exempt because this amount is already taxed in the hands of the firm. So see, this net profit is of the firm. So when you're doing computation of the partnership firm has already considered this net profit as its PGBP income and paid the tax. Now, since the partnership firm has already paid the tax, again, when the same net profit is distributed between the partners, firstly, it is the partner's income, no doubt, but it is exempt in the hands of the partner because the tax of it is already paid by the firm. Otherwise, it would be double taxation. Next, now this is what is nowadays a new trend. What is this new trend? You may have heard this word, non-compete fees. What is this non-compete fees? See, many times when you are starting a new business, let us say you are starting a salon in a particular area. Now, already in that area, there is some established salon. Now, that salon person feels that if you start the salon in that area, the business of that person is affected. Definitely, it will be affected. So that person comes to you and makes an agreement with you that you do one thing. You don't set up your salon in this area. You set up outside, let us say 5-7 kilometers outside this area. You agree. But why you'll agree? You agree because in this agreement, the person has agreed to pay you some lump sum compensation. This compensation is paid so that you do not compete with that person in that area. So it is a win-win situation for both. That person is having established business. If you start your business in that area, the person's business will be impacted. For you, what is the benefit? You are getting a lump sum amount, and what you have to do, you have to only start it in some other area. So you are also happy because you are getting a lump sum amount upfront. So when you receive such amounts, it is called as a non-compete fees. Now, a non-compete fees is a fees that you receive because you have agreed for not carrying out any activity in relation to business. So when you receive such type of non-compete fees, it will be also considered as part of PGBP head. Next comes keyman insurance. So you know this, a businessman takes this policy in the name of its employees or directors, that is on the life of their directors or key employees. This is what is keyman. Now in keyman insurance policy, there are three possibilities. Possibility one, let us say that particular key man, that employee has expired. So the insurance company now pays you the policy amount. Now, if this policy amount is paid to the employee as per the terms of key man, that amount is taxable in the hands of the employee as his or her salary income. We have definitely studied this in the salary head. So whatever amount is received as key man insurance policy by the employee is taxed under the head salary. Second possibility, Keyman Insurance is paying that amount to the family members because now the employee has expired. So the amount is given to the family members. If it is given to the family members, it is taxable in the hands of the family members as their income from other sources. And third, if it is given to the businessman, because the businessman had taken this policy. So there is, see, many times you'll find a sharing ratio of this scheme and policy amount. So whatever is the amount paid to the businessman, because actual loss is also incurred by the businessman because he has lost a key person who was a very important person for his business. Now, if that person is lost and the company, insurance company is paying a keyman insurance amount to that particular employer, that is the business, in the hands of the businessman, it will be treated as PGPP income. So, keyman insurance amount given to employee, it is taxable to employee as salary head income. Given to the family members of the employee, it is taxable to them as their other sources head income. And if it is given to the employer who is the businessman, then in the hands of the employer, it is taxable as his business head income. Students, I hope you have understood this thoroughly. Fine. What else? Now, this point I'll discuss a bit later because these 2 points are slightly technical also, and they are very specific to one situation. So let us keep this aside. So we have discussed up to point number 8. So this is what section 28 covers. So section 28 covers different types of receipts arising from business. I have given you a list of them. I'll just write one more thing. These may be directly arising from business as per the list, or some indirect receipts which we just discussed, like for exporters, some direct export benefits, or you are receiving non-compete fees, or you're receiving compensation. All these are indirect receipts which are also taxed as business income. Correct, students? This is as per section 28. Now we come to section 41. Now, what is covered in 41? You already have studied that in accounts also. What is that? So I'll give you example of what is covered in 41. It covers one of the items which is bad debts recovered. Now we have studied this in accounts also. What you have studied in accounts, bad debts recovered is credited to your P&L. In other words, you are showing it as your income. Same logic is here. What is the logic? Let us say 3 years back, I had incurred bad debts. Why? Because one of my customers turned insolvent. So I treated the entire outstanding from that particular customer as my bad debts. Please understand this. So the point is, 3 years back, I showed some amount as bad debts because either the customer passed away or that particular client's went into insolvency, or let us say the client has fled and there is no one at his business place, the business place is shut down, so the client ran away. In any of these cases where I believe that my outstanding amount cannot be recovered from that person, I treat it as bad debts. Now, when I treat it as bad debts, what I have done in that particular year, 3 years back, I have debited it in my P&L. It means I showed it as a loss. In future, what has happened? That is in the current year. Somehow that person was traced and that person paid me maybe my entire outstanding or some part of the outstanding. Now, what is important here is I'm trying to tell you what is the logic of this, which is followed in accounts also and which is followed in income tax also. Any expense or loss of earlier period which was allowed as deduction. Now you say, sir, what is allowed as deduction? See, allowed as deduction means recall accounts. 3 years back, you have shown it as debit. It means you have taken deduction of it because once you debit something to your P&L, you have reduced the net profit by that amount. So I have reduced my PGBP income by that of PGBP head. So there is any expense or loss, it is pertaining to earlier period, and in that period, I have shown this amount as my deduction in PGBP. Now, when I'm showing this amount as my deduction in PGBP in past year, if that amount is recovered, so this expense or loss is recovered or it is reimbursed, it is PGBP income. This is what section 41 says. So see, basically understand the logic of section 41. So section 41 logic is amount which was earlier shown as an expense or loss. Shown as an expense or loss in our simple words, in PGBP words, it was earlier allowed as deduction means you have debited it to P&L. You have reduced your PGBP income of the past period, right? This is what is allowed as deduction. Now that amount is recovered by you. It is reimbursed to you. So there was a loss which was reimbursed to you. So if earlier loss which you have already debited shown as deduction is paid back to you. So now you have to nullify the debit effect. Please understand the logic. So you have already debited your P&L of 3 years back, but now that amount is recovered, reimbursed. So you have to recredit. So when you are nullifying it by recrediting it, that is what is to be treated as income under section 41. So I've given you example. So example is like bad debts recovered, which we have seen in accounts. And logic I have written. The 41 section says what expense or loss you have debited earlier, that is claim as deduction. If it is recovered by you now, we will treat it as your PGBP income. Students, is this clear? This is what is section 41 saying. Is this clear to you all? Good. Very good. Super. Good. Great. Fine. So all of you all have understood. Now, let me take you to this special section. Now, this I'm saying it is a special section. Why? Because it is not going to be required regularly. It is again maybe required in the exam. If I have to tell you from exam point of view, it will be required in your MCQ type of questions. So regularly you require 28 and 41 because those are the two sections which tells you what incomes will be covered under this head. Now, what is important? Understand this. You have to consider your business receipts in section 28. No doubt. Now, what is 43 CA dealing with? You are a builder developer. In other words, you in real estate. So you are a developer of land. So you sell land in the form of plots, or you are a builder of buildings. So you construct a flat, a shop, and you sell the flat or shop. Now, what you'll write in your P&L, you will also write sales only. Here it will be sales of land or building. Now, whenever you are selling land or building, so firstly, as per section 28, whatever you receive from sale of this land or building, since you are in the business of selling this land and building, it is your PGBP income. Please understand this point first. In case you and me, who are not in the business of sale of land building, we sell any of our plot of land or we sell any of our old house or our office, for us, it is a capital gains. Why? Because you and me are not in the business of dealing in land and buildings. This is for you and me a capital asset. But for a builder whose business is constructing and selling various shops and flats in a building, for that builder, the same land and building which it is having is not a capital asset, it is a stock in trade. Please understand this. So for a builder developer, the land and building unsold is a stock in trade, right? So right, what you and me call as closing stock, for them the closing stock is unsold land, unsold building. Clear? Now coming to the point. Now when they sell their land or building, this is important. When they sell their land or building, they are showing it as sales, like how any other businessman will show sales. They are showing as sales. Now, this is firstly as per section 28, it is part of PGBP. Clear? Now comes the role of 43CA. What does 43CA says? It says what value you will take, that is what amount you will take here. This amount is decided by 43C. Now, firstly, let us go by logic first. Let us say I am a builder developer. I have constructed a building which has 100 flats. Now I am selling each flat one by one to you all. Let us say you all are the flat owners who are purchasing the flat from me. Now, for me, what is the sale value? As per accounts or as per normal logic, it is the price at which I have sold the flat to you. So let us say I have sold the flat to you for 1 crore. So how much amount I will write in sales? I will write 1 crore. Simple, right? Now comes 43CA. 43CA says that the government has found out in past that people are fabricating, people are manipulating this particular figure. How? So let us say actually this flat is for 1.5 crores. But to evade tax, you and me have decided to show on the agreement only 1 crore. This is what is the manipulation. So for a tax evasion, I am purposefully showing a lower amount on the agreement. That amount I am showing as the real sale value, though the sale value may be higher. Now, because of this, there are two types of tax evasion. One of income tax, two of stamp duty. Now, you would be knowing this state-wise, different states have stamp duties whenever you go to register any of these transactions, which is for land and building. So when you register a land and building, because you have sold it, purchased it, the state government levies stamp duty, which is generally paid by the buyer. So it is your liability. I am the seller. I am selling that land building. I will earn income profit from it. So on which I have to pay income tax. This is my tax liability. Now, if we both decide to show the correct value, which is 1.5 crores, you have to pay stamp duty on 1.5 crores. I have to pay income tax taking 1.5 crores as my income or my sales. So for both of us, the tax liability increases. So what has happened or what is still happening? People are fabricating this value. So between you and me, we decide that on paper, while registering on agreement, will show only 1 crore. So you also have to pay stamp duty on 1 crore. I also have to pay income tax, taking 1 crore as my sale value. And remaining 50 lakhs, we will adjust personally through cash or any of these things, which is we call as black. Now, to avoid this type of transactions, government has taken many measures, but still practically people are doing. So what government came up with, at least let me get my tax. So what they have come up with is, they have come up with a artificial calculated value, stamp duty value, or simply stamp value. Now, why I'm saying this artificially calculated value, it means it is a value fixed by the government. Now, this value is fixed by the state government for the purpose of their stamp duty calculation. Fine. So already for every land and building transaction, there is a value which is given in the ready reckoner. This is a term used. So the state government has given list area wise, they have fixed up the rates, which is called as the ready reckoner rate or the circle rate. For us, we will call it as the stamp value. Now, what does the law says? Now I'm taking this example. Agreement, we are showing 1 crore. What is the actual sale value? Like I said, 1.5 crore, government does not know. So forget that. On paper, we are showing our transaction value, our agreement value as 1 crore. Now, whether this 1 crore will be taken while computing PGBP income or not, this is what 43CA decides. So 43CA says that whenever there is a transaction of land and building, take this agreement value. So in my case, it is 1 crore and compare it with stamp value. Now there are three possibilities. What are the three possibilities? Okay, I'll show here. Agreement value, stamp value. Possibility 1. Agreement value is 100. Stamp value is 96. Possibility 2. Agreement value is 100. Stamp value is 103. Possibility 3. Agreement value is 100. Stamp value is 112. Now, what does 43CA says? See, 43CA is only to determine what amount you will take in the P&L credit side while determining PGBP income. That is, in short, 43CA is dealing only with this amount. Now it says, compare the amount which you have shown in the agreement, the stamp value fixed by the state government. If your agreement value is higher, so in my first case, agreement value is higher. So they say, take 100 rupees as the value for computing PGBP income. No doubt at all. But wherever your stamp value exceeds your agreement value. So in my next two cases, stamp value has exceeded my agreement value because stamp value in this case is 103, agreement value is 100. Now, whenever the stamp value is in excess, they say, do one thing, calculate a value. What is that value? Calculate 110% of your agreement value. So I calculate 110%. How much it comes? It comes 110. Now I have to compare this 110 with my stamp value. If this 110% which I've calculated is now higher, then again what I will take as my final answer for computing PGBP income is this agreement value itself. So first possibility, agreement value is higher, take that as the final value. If stamp value is higher, then make a calculation which is 110% of your agreement value. So in my example, agreement value is 100, 110% of that comes to 110. Now compare this 110 with the stamp value. Now what is the possibility? The possibility is now this 110% value which you have calculated is exceeding stamp value. Now when this 110% value is exceeding stamp value, you will take again your agreement value as the final answer. Correct? Third possibility. Again, my stamp value is higher. So again, I have to take 110% of my agreement value. Again, 110% comes to 110 in this example because my agreement value is 100. Now, when I compare this 110 with my stamp value, here my stamp value is still higher. Now, the law says if your stamp value is higher than the 110% of the agreement value, it means stamp value is much, much higher than your 110%, then you have to take stamp value as the value while computing PGBP income. So there are three possibilities. In two possibilities, you will take the agreement value only, and in the third possibility, you will take the stamp value. This is what section 43CA tells you. So 43CA, as I said, is a very special provision. In exams also, it may not be required every time. It will be required only in one specific type of question where the sum is of builder developer. Generally, this will come to you as an MCQ question. So in MCQ, you will be having a comprehensive question with many subparts. One of the subpart will be dealing with this valuation. So students, this is all from my side for today. We have completed the PGBP credit side provisions, which include three sections, two regular sections for computation and one special section. You have to read the first part of your PGBP chapter from the module, as I was showing you, which includes the format, which includes the basic initial discussion about business profession, etc. And then you have to read these three sections, 28, 41, 43C. This is fine. See, I've explained you all these provisions, but when you will read it from the module, slightly you will find it initially difficult. Why? Because of the language. No worries. Keep whatever I have explained in mind. You will understand everything. And even still, if you don't understand, I'm there in the next class. We will again discuss it. Anyways, I'll be revising everything in the next class. But if you have come read, you will come with your questions, specifically with the module language. I will even explain that. So Vijay, this will help government by wherever you have undervalued your property, like in my third example, the stamp value will be taken as the value for computing tax. So at least the government will be able to reduce the tax evasion component. Correct. So your valuation actual, the price at which you have sold is much higher, but purposefully you are showing lower value. Now this amount which you are showing, which is on the agreement, is compared with stamp value. And stamp value government tries to fix it keeping the current market prices in mind. So in such cases, the stamp value automatically will get taxed. So the government will at least avoid, maybe not to complete extent, but to some extent, the tax evasion which people are doing. Is this clear? Students, section 43CA is not yet complete. There is some technical part also in 43CA, but I'm purposefully keeping it for the next class because if I include everything in the one class, it may go bouncer. So right now I've only explained the working part of 43CA. There is one technical component which we study in the next class. So students, I hope you were able to make out this PGBP, and I'm sure by the end of today's class itself, you would have found much comfort with this chapter. But yes, this will be challenged again and again, your comfort, your understanding as we proceed. No worries. Every time I'll be there to help you, guide you. But only thing I want from your end is regular reading. Keep reading, keep revising, because that will make the concepts thorough. That will also let you know, help you know what you don't understand, which you can ask me immediately in the next class and get it resolved. Mehek, beta, if both the values are equal, then you take any value. Actually, it is the agreement value because stamp value will be taken only when it exceeds your agreement value beyond 110%. So if stamp value and agreement value are equal, technically it is the agreement value which you take. Fine. Excellent. So thank you, students. Thank you very much. Let us connect again on Thursday and we proceed with the debit side provisions, which is the most lengthiest part in PGBP. Thank you. Thank you very much. Take care and keep studying. Yes, sir. Sridhar, just 1 second, sir. Sridhar, it is 110% of your agreement value. It means 10% above the agreement value. So when you are saying 10% is 10% above the agreement value, or mathematically agreement value multiplied by 110%. Both means one and the same, Sridhar. Correct? Yes, Ashokji. Thank you, sir. Thank you very much. Good day, Ashokji. Good day.